I have the pleasure of introducing this panel on alternative financial solution pre and post-COVID. We'll hear from experts on the ground, both investors and financiers. I'm joined today with Dr. Mohamed Gambo, the head of Shelter Afrique Center of Excellence. I'm joined also by Johnston Oltesia, the Chief Executive Officer and Managing Director of Kenya Mortgage Refinance Company, KMRC. Mildred Mutesa, thank you so much for joining us. Mildred is the Managing Director of Zambia National Building Society. It's a pleasure to have you with us, Mildred. And finally, Dr. Andrew Jones, the Research and Policy Manager at Real, an investor in affordable housing, a large investor in affordable housing in Africa. I think our panelists are logging in. I'm just giving them a couple of seconds to Andrew and Mohamed. Can Johnston and Mildred, can you both hear me well?
Yes, we can hear you.
Excellent, excellent.
Yes, we do.
Excellent. Just giving a couple of seconds to Mohamed and Andrew to join us on stage. Hello, good morning, Andrew.
Morning.
Good morning.
Good morning.
Good morning. Just waiting for Mohamed and we can start. Perhaps while we wait for Mohamed who is logging in, perhaps if I can ask you to briefly, I very briefly introduce you and give your title, but if you can just in 45 seconds or 1 minute explain a little bit what you do and what your institution do to the participant, that would be very helpful. Can I start perhaps with Mildred?
Thank you so much.
Yes.
So I work for Zambia National Building Society. We are a mortgage financing company in Zambia. We are 100% owned by the government of the Republic of Zambia. Our main focus is to provide affordable mortgage financing for customers in Zambia. So we provide mortgage solutions for outright purchase, construction loans, and we have other solutions for customers that may not have title as well. We also have a full range of banking products, but primarily our focus is providing mortgage financing solutions.
Thank you, sir. Thank you so much, Mildred. Johnston, may I please ask you to introduce a little bit what your institution do and what you do?
Thank you, Olivier. KMRC is a wholesale financial institution which provides long-term financing to primary mortgage lenders in Kenya. So the institution is pretty much a wholesaler of finances. It's not in the retail space, and it works with the primary mortgage lenders, which are the institutions that are primarily providing financing for home loan purposes to the people in Kenya. So it only has two products. It's affordable housing, which tends to focus on the poor income segment of Kenya. And the other one is the market rate, which is obviously available to anyone else who is
Hello, can you hear me? Yes, we are back now. Sorry, excellent, sorry. I was asking Andrew if you can speak a little bit about Real and what you do.
Of course, thank you so much, Olivier. It's a pleasure to be here. So I work for Real. So Real is an innovator and investor in affordable housing for people on low incomes in urban Africa and Asia. So we're headquartered in the UK, but we have a very wide global network. Our priority countries in Africa are Kenya, Nigeria, and Uganda. And effectively what we do is, with the support of the Swedish and UK governments, we utilize development finance to invest in commercially viable, affordable housing developers across both continents who have potential for scale, to demonstrate the viability, to demonstrate the model and take the first risk. We also increasingly make strategic interventions in markets to tackle systemic bottlenecks around finance, policy and regulation. So pleasure to be here. Thank you.
Thank you very much. Thank you. So sorry for the little connectivity issue. the speakers are reconnecting. But in the meantime, what I wanted just to describe how we're going to organize this 60-minute session. So we'll ask questions to the speakers, and to have a discussion around how the increased affordability and the product offering, the lessons learned from the current crisis, the current economic and health crisis, how your portfolio, how you're mitigating the situation with regard to your portfolio and your offering. And then I invite the participant to submit their question in the chat section. I will read them either through at the end of each intervention, or perhaps keep them to the end, depending on whether or not those questions will be addressed during the discussion or not. But please feel free to write to the participants. Feel free to write any question you may have on the chat, and we'll try to address them all. Miguel, maybe can I start with you? This session is organized in twofold. It's also
lost our moderator, so I'm going to come in and we'll do what we can as Olivier comes back on. We never quite know which zone is going to cooperate or not cooperate. Mohammed, hello, how are you?
I'm fine. Fine.
Very, very nice to see you. Would you please introduce yourself?
Okay. All right. Yeah, exactly. Hi. Yeah, fine. Good morning, ladies and gentlemen. Yeah, it's a pleasure being part of this. Yeah. Okay. Good morning, panelists, ladies and gentlemen. I'm by name Mohammed Mustafa Gabo, the head of policy, research, and partnerships at Shelter Afrique. Shelter Afrique is a Pan-African housing finance institution. It's headquartered in Nairobi, Kenya. It is Shelter Afrique has 44.
Mohammed, are you there?
Sorry, it's like I'm having an echo here. Am I audible?
Yes, we can hear you.
Okay. So, Shelter Afrique is a Pan-African housing finance institution based in Nairobi, Kenya. It has 44 member states, African member states, and also as shareholders we have African Development Bank. So, yeah.
Sounds like, looks to me like we're having some real sound qualities today. Andrew, I can see you. You're nice and steady there. And Mildred, I can't see you, but I hope you can hear me and that you're present. I think we should just, Andrew, maybe you seem to have the strongest connection at the moment. Maybe if you could just tell us a little bit about what is the work that Real has been doing and thinking about in terms of alternative solutions financial solutions in this COVID era? You'll need to unmute yourself.
Of course, yeah, no problem, Keisha. I guess perhaps to talk a bit about the impact of COVID. So I think obviously we all recognise the huge impact that's had on, and for real, as I mentioned in the start, because we work exclusively for people on low incomes in the bottom 40% of the income pyramid, the impact of COVID has therefore obviously been profound and far-reaching across our target markets in both Africa and Asia. And we confront, all our customers have confronted a sort of pervasive loss of jobs, incomes, savings, and livelihoods for many of the customers we supply to. And this loss of income and depletion of savings in turn makes it very challenging to make sales, and therefore also more challenging to prove the commercial viability of affordable housing and crowd in new actors, which is obviously fundamental to Real's mission. And our housing developer partners are similarly been affected through a drying up of credit, reduced demand, and more challenging economic conditions to operate in. So this is in many ways a vast existential challenge to what we're trying to do and our mission. And yet there are also many reasons for optimism. We have seen clear signs that our target market is overtly recognizing the centrality of housing as a vehicle for pandemic resilience and ensuring long-term stability through ownership of an asset. Many people on low incomes we're observing, perhaps we need more evidence to really demonstrate this more deeply, but there seems to be definitely signs that people on low incomes are doing more to save for deposits, to examine the quality of the housing they've resided in. And what Real's effectively done, we mitigated against COVID in a lot of ways to protect our partners and our clients, including moratoriums on loan repayments and so on. But we've also actually adopted a sort of counter-cyclical approach by investing in housing construction during the current crisis. We know that people need housing. We have faith in the viability of our partners and our models. And in the last month or two alone, we've invested somewhere in the region of $6 or $7 million into several partners and their affordable housing projects. And as we speak, Real partners are either constructing or gearing up to construct quality affordable housing in such varied contexts as Mozambique, Nigeria, Kenya, Pakistan, and India. So we've been doing. I guess almost the point I'm making is that COVID is a huge challenge, huge crisis, but there is also a clear opportunity here, I think, to push ahead. And at the same time, we obviously accompany that housing investment with a package and a suite of interventions in the regulatory and financial arena, including pushing forward on initiatives to unlock housing finance for low-income and informal sector individuals. So yeah, lots of promising signs despite the challenging macro environment.
That's very interesting. I mean, I think the thing is that this crisis has really, what it's done is it's shone a light on the reality of very many people's lives, and the sooner that we organize our approaches and our financial products and systems to respond to that, the better. So there is a clarifying element in what we've had to manage. Mildred, Mohammed, and Johnston, you all are investees of the African Development Bank, and they've been working with you explicitly in the focus of promoting, of course, investment in affordable housing. I wonder if you could maybe each take me through a little bit. Let's start with you, Mildred, about how that support has increased affordability and product offerings and the lessons that you've learned, reflecting also on the impact of this current context. Mildred, would you like to start?
Yes, thank you so much, Keisha. I hope you can hear me very well. So you are right, we have been working with the African Development Bank. We have accessed a facility of about $25 million to increase the number of people in Zambia that can actually access housing finance. In terms of how that has helped the Zambia National Building Society and generally the Zambian mortgage market, two things I think stand out very clearly. Number one, with the financing that we got from the African Development Bank, it came with a hedging facility, which is something that is quite rare on this side of the market. Because of that, we have been able to extend mortgage facilities to customers without any FX risk. And this has significantly contributed to making the mortgage quite affordable to customers. And then secondly, the pricing of these funds was actually very competitive. obviously linked to our local treasury bill market. But what we've seen is that the pricing at the end of the day of this facility was 8% lower than if Zambia National Building Society had gone out to the capital markets to raise its funds. And what this has done is we've seen an increase in the number of people that have actually accessed affordable mortgages. And we define affordable mortgages as loans not exceeding a $60,000 mark. We've seen over 100 families access affordable mortgages within the period. And what is interesting is that the mortgage book has actually grown by 24%. And when we took a deep dive to see, despite the COVID pandemic, what is actually driving this growth, Keisha, what is interesting to see is that with the pandemic, we see people wanting housing being a basic need and wanting to secure the future of their families. Interest rates have gone downwards, obviously, as the economy globally not doing well. So that has offered some form of relief to mortgage, those who wanting to access mortgages. But also COVID has brought about a reduction in property prices. That is being taken advantage of and being seen as an opportunity. I know Andrew spoke about, a counter-cyclical effect, and I think we see that in the mortgage market in Zambia quite clearly, as more people coming onto the mortgage ladder, especially because property prices have generally gone down with the, with the advent of COVID-19.
Thank you. I think that's so fascinating, and it really does show how the housing sector can become that anti-cyclical. It's that stabilizer to pull us through the crisis and into the recovery. Johnston, I wonder if you could come in now, because in fact that you're looking at that as well, reducing the cost of with the reduced cost of capital, reduced finance costs for end users. And I understand that the KMRC just recently received its registration and is open for business.
Absolutely. Thank you, Kezia. Strangely, our experience is not too dissimilar with what Mildred has described. But in any case, we're also benefiting from the same support from African Development Bank. It's a sovereign loan, and that is the government of Kenya is borrowing from the African Development Bank. And the reason why that is happening that way is so that we can have to achieve that affordability. The government of Kenya borrows, obviously, and that's cheaper, because the government of Kenya is taking in the forex cost or the risk that comes in with that and passes financing to KMRC in Kenya shillings. So we have 100 million loan from the African Development Bank through the government of Kenya. And when you talk about affordability, we are passing this financing to the market at a rate of about 5%, which is almost half of what we currently have in the market, actually far less than half. And that obviously, the intention is to create that affordability. Now, when you look at the effect of that is, because African Development Bank is certainly supporting the general affordable housing program for the government, that will essentially help the government to achieve its affordable housing agenda. But more fundamentally, it enables people at the lower income to access long-term housing loans and enjoy a wider choice of competitive price, mortgage offering, which will otherwise have been a challenge if we essentially just use market rate financing. Now, that was the support by African Development Bank and others have also made it possible to include non-traditional players in the market, which essentially increases competition and the product offering and innovation. The non-traditional ones in our case, mainly SACCOs, the savings and credit cooperatives, who have not been offering mortgages, but have been significantly providing loans to the individuals, which a majority of which go into housing. People use that for incremental housing development and things like that. But now that is leading to some kind of mainstreaming where SACCOs are now extending to offer mortgages as part of their product offering. And that, creates competition, which helps a lot of people to be able to get more home loans. The expectation is that about 2,500 new mortgages will be issued using this support or this funding, and that intervention will potentially create an impacting about 10,000 or so beneficiaries. So that you can see that helps a lot in scaling up the mortgage offering within our market. So like Tessia rightly stated, we only got a license from the Central Bank of Kenya as a regulated institution in September, and obviously that means a lot to us, because as a regulated institution, you cannot go to the market, issue mortgages without that license. And that has cleared or paved the way for the institution to start lending to the market. Thank you.
That's fantastic, Johnston. I just wanted to point out a comment that was made yesterday in the presentation on Egypt's mortgage market. And there was a tweet that went out. Between December 2006 and June 2020, Egypt's mortgage finance market grew by 3,800%. And I don't know if you saw that presentation and the graph, but it just went straight up. And there's something very exciting about the market development component of what the KMRC is doing in Kenya. And for years, we've been saying that Kenya's mortgage market did not match its housing market. And I really hope that through your efforts and which in developing the market, that will grow quite dramatically over the next few years.
Absolutely, absolutely.
Yeah. Mohammed, let's come to you. So AfDB is also investing in Shelter Afrique, perhaps a little bit differently. You focus on the supply side and on construction, but maybe you can tell us a little bit about the role that funding has played. Mohammed? Mohammed, are you there? Can you hear us? Okay, while we wait to see, Mohammed, if you can hear me and you're trying, keep on trying. In the meantime, I just wanted to raise a question that's come through on the chat that relates to, there are a couple questions, in fact, around rental. And it is this question of, do we provide our finance on the demand side for an end user, or onto the supply side for the construction? And sometimes that's the very same client. The end user may well be the person who's developing, and whether that's for owner builder or as a rental investment. There was a question that was coming to Mildred around financing of rental, and does ZMBS offer its mortgages in that context to owner builders or to people who are developing small scale rental? Mildred?
We can't hear her. She's in mute.
We're struggling with everybody. But Mohammed's
Hello, can you hear me?
Oh, yes,
yes.
Now we can hear you.
I'm hoping you can hear me now.
Yeah.
All right. So as Zambia National Building Society was saying, we do provide not only mortgages for your own house, but we do provide mortgages for those customers that are looking to real estate as a business, and then obviously getting rental income. So that is something that we do actually finance Keisha.
Okay, that's great. Mohammed, you can come in now. I see you've come back, and I hope your system is working now. If you can tell us.
Yes, am I exactly? Am I audible now?
Yes, I can hear you.
All right. Yes, apologies on the technical issue, but I hope now going forward we'll be able to move on swiftly. So African Development Bank is a key shareholder in Shelter Afrique, together with four African governments and also Africa Reinsurance. So in terms of the support the African Development Bank, AfDB, has been offering to Shelter Afrique in terms of enhancing affordability of course, we all aware of the challenge of housing in Africa. Besides the supply of housing to cope the massive housing deficit, the affordability is a key challenge. So, of course, the facility has been offered by AfDB to Shelter Africa has gone a long way in enhancing Shelter Africa to deliver, products and services that are achieve the affordability agenda. In terms of lending being provided by Shelter Africa through the support of African Development Bank. This has been through the lines of credits and also the project finance products. For the project finance, with cheaper funding being opportunities being afforded by African Development Bank, this has resulted to more affordable housing to our member states. And also through lines of credit, cheaper mortgages are made available by the counterparty commercial banks that was advanced funding through the line of credit. So this has gone a long way to enable Shelter Africa to achieve its vision of the housing for all in Africa. So most especially now that also of other collaboration coming in terms of just as my colleague here, my co-panelist, KMRC Managing Director, also, this will go a long way in enhancing further, let me say, affordability in the mortgage market. And also, besides the supply and demand side, the support Shelter Africa from African Development Bank, the collaboration with the African Development Bank in terms of the activities relating to policy, research, and partnerships, where Shelter Africa does have the Center of Excellence, that's the in-house unit responsible for all aspects relating to research, advocacy, and capacity building. There's been lots of initiatives, lots of collaborations, because the challenge of affordability in housing in Africa cuts across not only the financing aspect, there's the need for enhanced policies to be improved. Just as we made mentioned by our moderator, in Egypt there was a dramatic increase in the number of mortgage uptake in the country due to we can relate this to enhanced policy by the government. So what we are also seeing at Shelter Africa is that our member states, they need to do more in terms of enhancing the policies and the regulations, which will go a long way in making the uptake of mortgage financing to improve. So we have held several activities at the Center of Excellence at the Shelter Africa, which advocates, which talks to all stakeholders, the public and private sector stakeholders, to see how can we be able to enhance policies and strategies to make more affordable mortgages available in Africa, so as to ensure that the region achieves its set objectives in terms of curbing the housing deficits and also achieving the SDG 11 as the sustainable cities and communities. Thank you.
Thanks very much, Mohammed. I mean, I think that is the issue that we've been grappling with is the policy framework that it creates the macroeconomic environment that addresses the cost of funds. And in that context, what we're really looking at is increasing, or let's say shifting the balance towards a reliance on domestic capital rather than foreign capital. That is easier to manage and easier to control. It doesn't have the same exchange rate risk and so on. I'd love to hear from each of you about how you're addressing that, about increasing the attention of local investors. That's like local pension funds is a huge source of potential domestic investment, but it's also often quite wary of affordable housing. And so it's concerned about levels of risk and whether it's going to be able to realize the return for the pension holders and other forms of domestic capital. I wonder if you could all speak a little bit about that. Let's start with you, Johnston, and then if you can all comment on it from your specific perspectives. Johnston. Johnston, I think you're on mute.
So thank you, Kezia. In the recent past, we have been working to crowd in the pension funds and other institutions which have long-term liabilities to support affordable housing. And the reason why we are doing that is that we recognize that KMRC sustainable financing is founded on issuance of bonds in the capital markets. And that will not only enable KMRC to support deepening of the securities market in Kenya, but it will essentially also enable participating institutions to access capital markets financing potentially more cheaply and actually more easily. You recognize that issuance of a bond to raise funds by financial institutions is never quite easy, but KMRC going to the market will essentially support some of the institutions to access capital market financing, which potentially may not have been possible for them to do that. The arrangement we have with the African Development Bank, has some kind of commitment to credit enhance KMRC's deeper bond issue. We are planning to issue a bond potentially in Q3 2021 through an African Development Bank accepted to provide credit enhancement. And the reason why this is being done this way is because KMRC will not have a track record in the capital markets, and that is essentially going to be replaced by the size of AAA rated balance sheet of African Development Bank, and this will help to reduce the interest costs either by improving the rating or mitigating the risk on the bond transaction, and therefore attract investors to the KMRC bond. Now, the kind of investors and potentially the kind of bond that we want to issue initially will be more of a privately placed bond. So we potentially start book building of a bond, and that means that we are going to target specific institutions like pension funds. And that conversation with the pension fund that we've started in the recent past is for purposes of building that edge up, so that then when we go to the market, it will be far easier to issue that bond and attract the kind of investors that we want to get. Now, of course, what you realize is that will further catalyze deepening of the capital markets, providing long currency, local funds, and creating a new asset class for investment by a number of institutions, and that's supporting the development of housing in Kenya. The development agenda of KMRC will obviously have the effect of either introducing new products in the capital markets that have not been there. And that means that when KMRC starts shaping the market by obviously creating the efficiencies, standardization of product coverage, including even just the mortgage origination processes, that will give way to more structured products. Like, for example, we'll have potentially start issuing housing bonds, green bonds, mortgage-backed securities, which in Kenya we have a framework for asset-backed securities, which obviously include mortgage-backed securities, but there have not been any uptake since, I think, 2013 when that happened. But we anticipate that with that kind of build-up in the market, that KMRC will potentially create a situation where you have some more diversity and offers more investment options for pension funds and other investors in the market. And that means we'll obviously be crowding in more local financing, locally denominated financing to support in the development of affordable housing.
I mean, I think that's something that, in fact, that the AUHF and that CAF should be able to help with you, not on the deal side, but on the promoting the successful investment story side, and think about ways of capturing that so that the market has the evidence that it needs in order to make these decisions, and they can look at the offerings and feel that they understand them and can trust them sufficiently to place their capital there. And I think that's a very important role for an organization like the AUHF and for the work also that CAF does. So we would like to work with you very closely around that.
Precisely, and we'll be very glad to work with you on that.
That's great. Okay, so we'll brainstorm. Andrew, is this something that when Real is working with its partners in each country, obviously you're working quite hard to support the success of that particular investment that you're making. But does an aspect of your work then engage at the macro level to champion these kinds of issues as well?
Yes, it does. I think quite simply, Casey. Yes. So I think, as I said in my introduction, Real obviously utilizes development finance from the Swedish and UK government to make targeted investments in specific developers and projects. But we do fully recognise that the future for affordable housing markets, whether it's in Africa or Asia, is not foreign direct investment for a whole bunch of reasons, not least the low margins and all the associated challenges that go there. Only mobilising domestic capital markets can deliver housing at scale. So I think Real, I guess, works towards that by trying to generate that evidence and the compelling demonstrations of the commercial viability of affordable housing, that this is an investable proposition for local markets, whether it's pension funds, banks, financiers. And we've done that by incubating and investing in credible, scalable developers. And we've actually invested quite a lot of money. I think over the last 20 years, we've invested somewhere in the region of $70 million. But I guess what we're trying to do is take that first risk, and in doing so work to de-risk investment, catalyze capital markets, and enable delivery at scale. But we're clearly not quite there yet. We clearly need further proof of the proposition alongside a very robust evidence and data agenda, which I think speaks to your previous points, Case. And we're very privileged to have CAF operating in this space. I think we're very big vocal supporters of CAF and the evidence agenda. We need that really to deepen our understanding of capital markets and enable the formulation of more attractive and bankable housing financial products, whether that's using green housing as a securitized asset or any other form. So that's what Real aspires to do. But we also recognize that clearly there must be engagement at the political and regulatory level as well. And actually one important sort of way forward that we found is actually where housing is reclassified by central government as industry or infrastructure, which often then leads to sort of reduced costs, more attractive incentives for capital markets. And we've seen this evidence of this in a number of countries, not least in Asia. It recently actually happened in Pakistan. And several of our partners are actually seated on governmental task forces and advisory groups, and are therefore quite well positioned to advocate for policy reform. So we do therefore embrace that side of the work. We see that I guess that intervention in that arena is absolutely critical to fostering more conducive markets that ultimately unleash the flow of private investment. And it's only with that flow that we can deliver at scale. Yeah. So thank you.
That's great. Thank you very much. Mildred, I'd love to hear from you how ZMBS is engaging with your local capital markets and then there's also a question that's come through the chat, is more about the products that are delivered, which I think you might also be able to speak to. Sheikh Ko has come with a question saying, how does a potential homeowner access finance by whatever means without a stable income as a direct result of COVID economic downturn globally? So he's talking about alternative intervention methods from governments. So I know you would be engaging with the government around that. But I'm also interested in many other product designs that you might have incorporated to address informal incomes. I'm giving you 3 questions there. Maybe you can wrap them all together in your answer.
All right, thank you so much, Keisha. So as Zambia National Building, hello? All right, so as Zambia National Building Society, in terms of how we're engaging capital markets, at the beginning of 2015, Keisha, we did register what we call media term notes on the Lusaka Stock Exchange. This is in an effort for us to support our local capital markets. However, we noted quite quickly that investors in Zambia, their appetite is between 3 to 5 year funding. So ideally, this is not very ideal for mortgage financing. But what we did do is use those funds to develop other housing products. Currently, we have what we call a building materials loan. It's an unsecured 5-year loan that will help customers that don't have titled land to start the construction of their house using this particular fund. And I must say that currently we've been able to reduce the pricing on the building materials loan using some of the funds that we access from the African Development Fund. So what we are doing, considering the limitations on the capital markets, especially that pricing on the local capital markets in Zambia is reference to treasury bill rates, which can be quite expensive, plus a risk premium. We have strategic partnerships with the local pension houses, and we've been able to have to negotiate for private bonds with various pension houses. And what this has done is we've been able to access a large pool of funds at a slightly affordable rates and be able to pass on this benefit to customers within the Zambian sector. So we are working quite closely with pension fund houses. In terms of what have we done and how can one access home ownership, obviously the advent of COVID, it's been difficult, I think, especially for those who perhaps may have lost employment during this period. But we are supporting some of our mortgage customers through a fund that we have accessed from our central bank. It's a targeted medium term facility. So with this facility, we've been able to support mortgage, our mortgagors that may need a period of time when they shouldn't be repaying or restructuring of their mortgage facility. So we've been able to assist a number of customers with this targeted medium-term facility, or COVID fund, as it were, from the central bank. In terms of structuring product facilities for our informal sector, traditionally we used to only accept mortgages backed by salaries, but now we've kind of increased our spectrum and we are assessing different types of income. So at the moment we'll be assessing whatever comes through from your business. If we're able to assess that it's actually stable income and it's verifiable, we're actually accepting a business income such as rentals. We are accepting, different types of income, and based on the income that you're able to declare and whether it's sustainable and it's been coming in consistently, we're able to offer different types of products, including the building materials loan and a construction loan. The beauty of a construction loan is you don't have to take out a big mortgage. So we're able to finance your slab or finance your walls or finance your roofing project. And we found because of a construction mortgage, a lot more people are able to, come onto the mortgage market and be able to build a home, as opposed to the traditional large-scale loan, which may not be so affordable. I hope that answers your question, Keisha.
All of them, and really interesting. I wonder, are you monitoring NPLs on the basis of your traditional financing and then your more alternative financing arrangements?
Keisha, what's interesting is for the mortgage NPLs, it's actually reduced. So we started the year with interest rates north of 10%, and now we're sitting at NPLs under about 7% as we speak. And we find, as I said earlier, that with the advent of COVID, most of our customers, the number one thing that they would definitely service is their mortgage, and then the unsecured come later. So we've noticed, especially on our construction, it's actually doing very well compared to the outright purchase. And I think this is because the construction mortgages are much smaller, they're easier to pay back, the repayments are smaller. So we have seen a good performance in NPLs on our mortgage book generally, but more so on the construction mortgage book.
That analysis, I think, would be so useful to just document that, a differentiated analysis by product, because the sort of vanilla mortgage is the one that investors are familiar with, and they're very happy to, 20 years, this target market, this is the approach. But if you start to prepare that analysis and share how the different products perform, some of them are contributing to job creation objectives as well, because they're enabling rental housing investments, and so on. I think that would be, well, it would be fascinating, but I also think it would be really useful for investors, and then maybe also allow for a more differentiated investor who would say, yeah, this is the niche that I want to target with my capital. Be something I'd love to talk further with you about sometime.
Absolutely, Keisha. And just to your point, we've noted that we've been able to access funding primarily because of this differentiated mortgage. Most of Zambia is not titled, so we've had to think outside the box and see how we could offer solutions to the low-income earners, but also those people that just don't have title. So you're quite right.
It does make me think that, when we say think out of the box, that box is so small, and then the continent is so big. We should all be spending our time outside the box. Let's move on to Mohammed. And I wonder if you could contemplate a little bit. You spoke earlier about the need for policies that create the enabling environment for domestic investment and, well, in investment in general, but the participation of local capital. And then, of course, an institution like the AfDB is providing its capital with particular objectives. They're very clearly focused on the SDGs. Can you reflect a little bit about the role of DFIs? I think Shelter Afrique in some ways is like a quasi DFI as well. It's supporting a particular form of investment with a particular market focus. How will DFIs support the growth of affordable housing markets across the continent? Please unmute yourself, Mohammed.
Okay, I'm audible now. Am I audible?
Yes, we can hear you.
Okay. Yes, Shelter Afrique also being a DFI in the housing finance space in Africa as a Pan-African housing finance institution. Of course, the role of DFIs is critical so as to catalyze investments in the affordable housing scene. It's the role of DFIs most especially starts with the aspect of providing capital on plans, most especially now with the effect of COVID in Africa. While aware of the fact that there's an interlinking, let me say, relationship between the spread of the pandemic and the state of housing and urban development in Africa, and also we're all aware of the fact that those nerve centers that are hotspots for the spread of the COVID pandemic are those areas that are lacking in this in housing. So the role of, in this context of DFIs is even much more important. In this context, of course, the role of AfDB and also other DFIs also in that line, Shelter Afrique, is most especially now to provide capital, increase the risk tolerance, and also to consider aspects relating to temporary suspension of minimum return requirements and new credit lines and guarantees to a way in enabling Africa to attend to the crisis caused by the pandemic. So, and other aspects that will go a long way in solving this challenge of affordable housing is that of providing technical capacity, technical support, in terms of technical assistance, African businesses and also other African, let me say, housing solutions providers. While aware of the fact that the challenge is not only that of financing, there is a lack of skills, lack of capacities, there's a lack of the technical know-how on how to be able to utilize and leverage on these funding opportunities. So that is why Shelter Afrique, one of its key products is technical assistance, as well as to ensure that our member states do have the requisite capabilities and the skills that enable them to tap into the financing opportunities out there. So going forward, really, DFIs do have an important role to play in that context. So we at Shelter Afrique, what we are trying to point out is that African governments now are all looking at for ways, for answers on how they can be able to revive their economies, in the era of COVID pandemic. So we're all aware of the fact how the pandemic has affected the economies generally in Africa, cutting across those countries that are resource reliant, such as Nigeria, Angola, on those that are even diversified. So the challenges are cut across all countries in the region. So what we are trying to say is that as an answer, as a way forward to enable African countries to revive their economies in the midst of this challenge of COVID, is that housing is a key solution in the sense that housing is not only the aspect of providing the units itself, which is a key parameter of SDG 11, but the impact of housing cuts across all the 17 SDGs in terms of women empowerment, in terms of enhancing, reducing poverty, in terms of innovation and infrastructure, in terms of partnerships. So all this cuts across all the goals of the sustainable development. So that was even the theme of Shelter Africa AGM, which held 2 months ago, September. What we pointed out is that African governments need to give kind of concerted efforts in terms of how they can be able to revive their economies through affordable housing. So by doing so, they're not only attending to SDG 11, which will go a long way to reduce the spread of this pandemic, but also has other interlinking effects, cutting across jobs provision, cutting across gender empowerment. So by doing so, I think it will go a long way towards enabling the region to really revive in the midst of the challenge. Most especially now that the challenge of COVID is not yet over. We're having the possibilities of a second wave. So this that it makes it much more important for African governments and also other stakeholders in industry to come together and to understand that the fact that this is the new normal, and to lay out clear and concrete plans on how affordable housing will be at the forefront of a revival in the region going forward.
Yeah, no, I agree with you, Mohammed. Thank you. I think all of those linkages are so important. And it's something also that our keynote speaker earlier today, David Dworkin, raised in his address, is that access to affordable housing impacts on so many other things about a good life. It has impact on education outcomes, on health outcomes, and so on the kind of food that people even buy. And so there's a real opportunity here. One of the things, there's a few comments in the chat that are relating to rental. And I'm conscious, as I know that all of you are, that in fact, across all of the cities across the continent, the majority of people are actually renting. And that means two things. They're not homeowners, they're renting, and they're paying something for their accommodation in most cases. Some do live rent-free, but in most cases they're paying something. It also means that they have a landlord, and that landlord is realizing an income. And so much of that is under the radar. We really don't know what the size or the scope of that actually is. But Mohammed, one of the things that you raised in just now was you talked about the technical assistance work that Shelter Afrique does. And Olu Olanrewaju, whom I know you know, in fact, from Altair, has asked a question about rental. And he's wondering that the thing that with rental is that it requires management capacity. Household level rental is perhaps more a direct relationship. It's I rent to you. But when it's a large scale rental, you have a landlord and they have to be able to manage over time. Is this something that Shelter Afrique is going to be looking at all? Is building the capacity of the rental management sector at all? I kind of feel, I'm going to come to you next, Andrew, to see if that's something that Real would look at, because I feel that that's sort of a gap in the way our housing focus is going, and it requires specific financing attention as well. Mohammed, just a quick comment.
Okay, yes, exactly, Tisha. Rental housing, of course, is a key area of interest. Just as you mentioned, is that a large percentage of inhabitants, most especially in our centers in Africa, in the rental space. So that's the reason why in 2015, Shelter Afrique organized a global conference on rental housing, where we congregated and bring together experts globally on rental housing from the developed and developing world. Because the challenge of rental housing in Africa is something that is not one size fits all. and it has a lot more of talking, but actual implementation has been a challenge. That was the reason why we congregated this conference, and we also issued a white paper after that conference, which kind of brought together a platform on how African governments and other stakeholders can be able to really enhance their strategies in rental housing. So it's a key area of interest to us. And something kind of related to that, which is also of significance to our activities at Shelter Africa, is also student housing accommodation, which part and parcel got has interlinkage aspects with that, because we're all aware of the fact that our institutions, public and private institutions, they do have a clear challenge of accommodating their students. This goes on to really, being a headache, a challenge on how parents can be able to, enable their wards to have, those facilities in terms of accommodation. So that was the reason why Shelter Africa has kind of made concerted efforts in investing in aspects relating to student accommodation, most especially here in Kenya. And we have seen the effect largely in terms of uptake, and the demand is all over, from Nigeria to Ghana, all across, from West Africa to East Africa to Southern Africa. There's the need, for our stakeholders, our government and private stakeholders, to understand, to make the laws much more effective and to catalyze investment in rental housing and student accommodation. And we at Shelter Africa are committed, because we have seen the effect here in Kenya, and we are looking forward to replicating such across African government states, which we believe will go a long way in providing alternatives, in terms of home ownership, not direct home ownership, but rental housing, which fortunately it provides the chunk of form of housing in the region. So we can't ignore it. We can't keep on just focusing on outright purchase. We give concerted consideration to rental housing. So we also are well aware of this challenge, and made lots of investments providing advisory in this context. And we're looking forward to working with more partners, so as to work together and to provide solutions to this challenge, because no single entity, no single institution can solve this challenge. The more partnerships we have, the more collaboration, I think that will go a long way in attending to this multifaceted challenge of housing in Africa.
Thank you, Mohammed. That's inspiring. And maybe what you can do is post a link to your white paper in the chat, because I'm sure people would be interested to see that if it is online. We have run out of time, but I want to give just one last quick comment. Andrew, I said I would come to you about rental. I wonder if you'd forgive me. I'd like to hear from a quick comment from Andrew and from Johnston about the future. You have to finish with that, and I hope it's a good news one. Andrew, very quickly, and then Johnston.
Thank you so much, Casey. Yes, I'll try and be brief, so I know we're out of time. So I think that the future in many ways is potentially very challenging. Post-COVID, huge need, huge loss of incomes and livelihoods. And we know that the scale of the housing challenge is vast. We know that somewhere in the region of 300 million new homes will be needed globally by the end of the decade to meet the escalating deficit. And Real estimates that will cost somewhere in the region of $17 trillion to resolve. I mean, that is clearly well beyond the capacity of public funds alone. So that's a huge, huge challenge in the context of rapid urbanization. But it's also a huge opportunity. The time is now, I think. The time is now, and we see housing moving back to the center of development discourse post-COVID. And we increasingly recognized as a vehicle for wide-ranging impacts across the SDG agenda. I think if we can prove the viability, we can prove the investable proposition, we have the evidence. I think if we can take that a bit further and we can deepen our understanding of markets, we can mobilize investment at scale, and we can build a future that is climate smart and safe and harnesses the opportunities of rapid urbanization. So I think there's huge, huge challenges ahead, but huge reasons for optimism as well as we confront the decade of action for the SDGs.
That's great. Thank you so much, Andrew. And Johnston, you're on mute, Johnston. Unmute yourself, please.
Thank you. So, of course, we all know the effect of COVID. I mean, the obvious I think things that we've seen is the increase in the non-performing loans. On aggregate in Kenya, we have a restricted loan amount, I think in June, of about $1.8 billion. So that means that a number of borrowers have requested for various loan accommodations. And the problem with that is that it affects the institutions. The financial institutions will not potentially have the ability to leverage their mortgage books for purposes of getting financing for KMRC, and that slows down the mortgage offering in the market. But we are optimistic that the markets will turn up again at some point. A liquidity provider like KMRC, for example, is considered a lender of second last resort, or potentially a lender of first resort for that matter. A lot of discussion was given earlier about the counter-cyclical effects of an institution like a mortgage refinance company and the potential to provide liquidity in the market and increasing the uptake and bringing back the recovery post the pandemic. In Kenya, for example, we have our policymakers are working on operationalizing a national credit guarantee scheme for purposes of de-risking lending or to the MSME sector. So there is a whole lot of implementation process that is currently ongoing, and that is part of the post-pandemic recovery that the government of Kenya is anticipating to help in that approach. But with the continued support with DFIs and providing flexible capital and financial support to businesses, I think we are very optimistic that post this pandemic will have a very quick eventual recovery in the markets.
That's great. Thank you so much. And sure, that was a fabulous discussion. I so enjoyed it. Thank you, everyone.